Hey, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. Today's March 25th, and just like that, we're a quarter of the way through the year. Yeah, so that really bothered me. Anyway, where are all the real estate rentals? That's what I'm digging into today. We'll also talk about mortgages, but first we're going to dig into this. I'm changing up the way I'm doing this. A lot less slides, a lot less charts, more just talking, giving you some information, and inviting you to provide some feedback and ask questions, things like that. If you've watched any of my previous videos, it's killing me because I'm a spreadsheet geek. I love to make charts and graphs and things like that. So again, we're gonna minimize that, but that's just the way I am. When I do that, I'm looking for trends in the data, right? So sometimes I pull data, look at it, see if I can find anything. And sometimes I experience things in the marketplace, and then I try to find in the data if it's verifying that it's really happening or if it's just a coincidence, because sometimes it is a coincidence. The rental thing, this is something I've experienced in the market, and I was looking for some data. And this chart here, this is the one chart we're going to go through. This chart here tells me everything I need to know, and it confirms 2 of the 4 reasons why we're having a hard time finding rentals right now. So if you look, the orange bars, that's the number of rentals available in a snapshot in any given month. The green dashed line, that's just a trend line. It's pretty obvious it's a downward trend. The blue line is the median sale price for homes in Connecticut in that month. So this is all Connecticut data. And that when I was looking at this, something jumped out at me right away that really confirmed, like I said, 2 of the 4 reasons. So take a second, pause the video, see if you can think of, or see if you can figure out what jumped out at me and what where you think the rentals are. So okay, the spoiler now. The blue line, if you look where it peaks, if you look within a month or so, the number of rentals drop off dramatically. It happens in 2020 in like the April-May timeframe, and then in 2021 in the same thing about the May timeframe. And if you look, you can see that where it peaks, all of a sudden the rentals drop off. So what's going on there? So there's a few things. The first thing I'm going to talk about is not related to that, but it's a big picture thing that's driving the entire real estate market. Since 2008, we've built in the country, and certainly in Connecticut, we've built about half the number of homes that we had built in any period before that. So what we're seeing is supply is way down and demand is way up. That's why prices are going up. I've done some videos on this in the past. You can go check them out. It's also impacting the rental market because there's not as many rentals now. So that again, that 50% build from what we've seen before. That there's less inventory, so there's less rentals, there's less houses for sale. You can probably find somewhere in the media where they're talking about 5.8 million homes that haven't been built, and that's why we're in this shortage for housing across the U.S. So that feeds into the next one, though. Higher prices equal landlords that are tired of being landlords selling. And this is happening a lot. I've got a lot of clients who are tenants that are looking to find another single-family home because the one that they're living in, the landlord's selling. Why? Prices are high. They can capture that money and then use it somewhere else. Maybe they're tired of being a landlord. Maybe they're retiring. Who knows? Whatever the reason is. So tired landlords selling because of high prices. The third one, that's the second one. The third one is homeowners who are seeing that they had a lot of equity, especially early on, especially in 2020 and early 2021. There were still a lot of rentals out there, and they had a lot of equity, so they sold and then rented. I can't tell you the number of sellers who I've talked to in the past who say, oh, no problem, we'll just sell the house and then we'll rent something. Maybe we can get something down by the beach. We'll wait until the prices drop. They all say that, and right now that's not going to happen. First off, all the rentals by the beach are taken. And second, a lot of rentals are taken. So it's very challenging to find a rental, almost as challenging it is to find a house to buy. So the first 3 are that 50% down on the build. We haven't built as many as we needed. Higher prices are driving landlords to sell and capture the equity. And then higher prices are also driving homeowners to sell and then rent. So on the landlords leaving, that means the number of rentals are down because they're selling mostly like the single family and multifamilies. A lot of them are going to owner occupied. So the supply of rentals goes down that way. And then with homeowners selling and then renting, that means the supply is going down because they're consuming a rental that was out there. And then the final one, the fourth one, is the continued push out of high population center areas. We're still seeing people moving out. If you look in cities, you can do this on apartment.com or wherever you want. You can see that cities have a lot of high-rise or like apartment buildings with plenty of apartments available. But if you look for like a single family or multifamily rental, there's very, very few. So again, the summary is the 4R, the 50% reduction in building over the last 14 years or so reduces supply. The higher prices mean landlords are selling, so reduced rental supply. Higher prices mean homeowners are selling and then renting in order to gap to the next house, so that reduces the supply. And then the continued push out of high population density areas is driving demand up. Those are what's driving the rental issues, in my opinion. Going over to the primary mortgage market survey, we're at 4.42, so no good information there for you. Sorry. We were at 4.16 last week. We're at 4.42 now. The Fed pumped up the Fed funds rate by a quarter of a point last week and said they're going to do it like 6 or 7 more times this year and a few more times in 2023. They're trying to tame inflation. It's going to take some time. Until that's done, interest rates will continue to creep up. What does this mean for you? If you're looking to buy, you want to try to lock in a rate where you can now. If interest rates go down later, refinance out. You can do that. So that's the mortgage picture right now. Hopefully this is a little bit more valuable to you. Not as many slides, not as many graphs and numbers and things like that. Just more information. If it is, please throw something down in the comments. I'm just trying to provide valuable information for you as you try to navigate the real estate market today. And certainly along those lines, my spring buyers and sellers guides are available. The links are down below. They're just stored on Google Drive. There's no information that you need to give, like email addresses, anything like that. Feel free to grab them. Please help me out with the YouTube algorithm. Click the like button for me, and you can subscribe and hit notifications so that'll help with the algorithm as well. And it also lets you know when I've got new videos coming out, which next week is going to be, again, the Connecticut specific update. So until then, have a great day, and we'll talk soon.